Hello everyone, this is Haralambos Pissouros, Senior Technical Analyst here at IronFX Global, bringing you the technical updates for October 29th. Today let's take a look at the technical picture of sterling dollar, which tried to move above the neckline of a possible inverted head and shoulders formation. I would also like to talk about dollar yen, which found resistance once again slightly below the 108.35 barrier. So let's start our assessment with sterling dollar. Cable moved higher and tried to move above the neckline of a possible inverted head and shoulders formation identified on the 4-hour chart. However, the advance was halted fractionally below the 200 period moving average. This reaffirms my choice to wait for a move above the 162 hurdle to confirm the completion of the pattern. A clear and decisive break above that barrier could trigger extensions towards the resistance of 163.40 at first stage. On the daily chart, the rate remains above the upper bound of a falling wedge formation. This is another technical sign that we are likely to experience further upside legs in the near future. I also see positive divergence between the daily momentum studies and the price action. However, I will stick to the view that as long as cable remains below the 80-day exponential moving average, the overall trend remains to the downside, and I would see any possible near-term advances as a corrective phase. Now let's continue our treatment with dollar yen. The pair moved higher yesterday, but the advance was halted marginally below the 108.35 resistance line, near the 61.8% retracement level of the 1st until the 15th of October down move. The rate remains within the purple upside channel. However, I would wait for a break above the 108.35 barrier to signal a forthcoming higher high and the continuation of the short-term uptrend. Such a move is likely to pull the trigger for a run at the next resistance at 109.25. Shifting our attention at our momentum studies, I see negative divergence between both the oscillators and the price action. Something that gives me enough reasons to adopt a neutral stance as far as the short-term bias is concerned. In the bigger picture, the 14-day RSI remains above its 50 line, while the MACD bottomed, turned positive, and crossed above its signal line. These momentum signs support the scenario that the retracement from the 110 line probably ended near 105.20, and that further upside could be expected in the not too distant future. So that's it for today. For more analysis and charts, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Haralambos Pissouros, Senior Technical Analyst at IronFX Global, wishing you solid trading.